As an investor, I want to make money from my investments, but since there is a risk of losing money, I used to constantly check my investments on my phone. And the worst days, I couldn't get any sleep because of the fear that at any point I could just lose my hard-earned money. This created a lot of anxiety. So in this video, I'll explain how I went from fear and anxiety to a point where I don't even think about it. I check my whole portfolio maybe once or twice a month, and then I check some of my stocks maybe 3 or 4 times a week. Hello finance people, my name is Robert and I'm here to share with you my learnings and experience about personal finance as a European. I don't know if you remember this, but in early 2021 there was a short squeeze of GameStop stock. It went from like $20 to more than $400 in a matter of like few weeks. This was mainly driven by a Reddit group and so on. I don't want to get into details too much, but I jumped on this huge speculation. It was going up and down. It was just a pure roller coaster constantly. I mean, I was checking my phone every hour, or maybe even more often. And most of the day I was really anxious. I invested maybe like $3,000 and almost immediately it decreased by 40%. Luckily, I was able to recover it later. But the thing is, this was the first time I was losing sleep over a stock. And I was able to, at the end I was able to get plus minus zero. But that experience showed me that I don't want to have this feeling again. So let me tell you 6 methods that helped me to stop losing sleep over investing. So let's talk about the first method. And in this case, let's give an example. Let's say, you have a car that you use every day to go to work and it breaks down. It's a major, something went wrong with an engine. And, you don't have that money because it's 3,000 euros. What are you gonna do? It causes a lot of stress because now you can't get to your work, or if you can, then it takes you an hour longer to go with the public transport. It's just a lot of pain and anxiety caused by that. But the great thing is there's one method that you can implement and you're never gonna feel this way again. And when I implemented this, I was just relieved. I had peace of mind. And not only that, I kind of felt more empowered. And I'm talking about saving up for emergency fund. If you implement this, you're just gonna have it's just gonna improve your financial well-being. So the recommendation is to save up somewhere between 3 to 6 months of living expenses. So if you spend 2,000 euros every month on your rent and food, then you should, save up, let's say 6 to 12,000 euros. This really depends how much you want to save up. The more you save, the sort of more secure you are. But at the same time, you don't want to save too much because you want to put some of the money to work for you and not just sit in your bank account. But honestly, this has been probably the sort of pillar for my financial well-being. It starts all from the foundation and I feel safe. So now I can build up, I can take more risks with my investments because I know there's that layer that protects me from anything that, if anything happens. Now, the second method to deal with the stock market or investing in general and how to deal with the stress is pretty simple. And I'm going to give you an example. So if you look at Tesla stock, you can see that it's been fluctuating quite a lot. It goes, 1 year it's there, another month it's here. It goes up and down constantly. But if you compare that to, I don't know, Coca-Cola or something like Procter & Gamble, do you see the difference? You clearly see that the Tesla stock is just going up and down and it's very volatile. You never know what to expect from it. However, the stocks like Coca-Cola, they are very stable. Even if they're going down, they're very stable at doing it. So you can always think about maybe investing in something that is less volatile. I would definitely stay away from crypto if you're too anxious about this kind of stuff and if you're checking your phone constantly just because of this. So for example, for me personally, high volatility doesn't work. Like any of the meme stocks, I cannot do them. I just don't want to check my phone all the time if they blow up or not. I just pick something that is a bit more stable in crypto world and I just roll with that. I don't need it. I think it's not for everybody. And if your friend is doing it and you're not feeling comfortable with it, just don't do it. It'll just save you so much headache. Now the third method, let's take a look as an example, the S&P 500 in the 2020s, just after Corona. So let's say you invested just before Corona, you were 1 week before it, and now then the lockdowns came and everything was closed and the stock market just crashed. You probably would be really panicking. Most people would just take their money out, especially if you're new to investing. But here's the thing, about 4 to 5 months later, it was already back on par. And even after that, if you look at what it is now, you probably could have made 50% on your investment if you just stayed calm. This is why I like to think about my investments as, they're locked for next 3 to 5 years. Because if you cannot make that kind of a commitment, then investing into stocks and ETFs is just not for you, because you cannot control the volatility, even within broader market. So I definitely, in my head, what I do, I just tell to myself, okay, if I invest this money, it has to be there for next 3 to 5 years or even longer. So be prepared for that, and that will also calm you down, because then you're not expecting the stock to perform immediately. Because at the end of the day, if we look at historical data, we're always gone up. It might take a long time, but we always come back. So just stay patient with it. And if you know you need the money sooner, so let's say you want to buy something within the next 6 months or 12 months, then you need to consider some other alternatives like high interest savings account, or maybe short-term peer-to-peer lending. So in that case, you're going to get most of your money back whenever you want, and you're not locked in if the market crashes. Now, when talking about this topic, I've heard some advice is to think that your money is already gone, so whatever you invest, it's already gone. For me, it didn't work. If I think about it this way, I'll just take too big of a risks. I was like, oh, well, this money is already gone. Let me put it on the latest crypto meme stock. And then if I lose it, I'm like, well, it was already lost anyway. So for me, it just doesn't work. For me, I like to think about it that the money is, I have it, but I need to, it's locked in for a longer period of time. Now, if you're curious what I have in my portfolio, you can check out this video right here, and that will take you to a playlist with all my monthly updates. There, I basically go through all my investments for that month. Now, let me talk about the fourth method I use to calm me down when I'm investing. And it's quite recent, actually. The Tesla stock has been, in the last months, it's been quite volatile. It's been up and down constantly. And the problem with that is when a stock is like that, I need to check it constantly, that it doesn't drop under certain threshold, and I'm still happy with the price. Because if it drops too much, I might just want to exit. If you're checking your phone constantly, that's going to create extra stress. Your partner or your friend's going to notice it because you're constantly checking stuff. I hate that. So for that, if you're unsure, if you want to have a bit of a safety net, you can always set a stop loss. So in that case, a stop loss will trigger whenever it goes below certain price. So let's say you want to get out of Tesla stock when it hits 160, then you just set it and forget it. That way you don't need to always check the price, because it will just execute it automatic. Or if you don't have the possibility to set stop losses, at least you can set some sort of a reminder or a notification when it drops to that price. But most of the platforms have some sort of a stop loss functionality, but I understand if you're also in crypto, there you might not have that. Or alternatively to stop loss, you could also have a trailing stop loss, I guess. So it just follows. If the stock is going up, it will just follow, the stop loss will just follow the price. That's another way to think about it. But you have these safety nets that you can use, and that way you just can stay away of checking constantly your investments. So if I talk about the fifth method, it's a bit harder, because you know how on YouTube and social media, everyone makes it seem that it's so easy to make 10,000 in a week, and you just log into one platform and you make 500 in an hour. The thing is, this is not possible. And if it is, you wouldn't be sharing it with everybody on YouTube. Yes, I'm sure some people get lucky, or they're in the right place at the right time, or they have the skills to generate this kind of income. But what that does to everybody else, or to us in general, it just sets unrealistic expectations that anytime you do anything, it should be, big money. It's just not true. They're selling you dreams that maybe only few people can realize. And what I believe in is that you can achieve these numbers, but it's throughout many years of work. It's not like you wake up and make 10,000 from thin air. No, you need to work before it for years to get to that point, and that you have audience and things like that. Then you can make that type of money. My fifth method is that I basically adjusted my thinking about what is realistic returns. So for example, for me in investing, if it's anything between 10 to 12% per year, it's beautiful. I am happy. Some years it will be probably negative, but overall, if I look at 10 years, I should see about 10 to 12 to 15% increase, then I've been doing really well. And I talk about this mindset a bit more in this video right here. You can click on it. It's based on my favorite book that I read about personal finance. If you read it, I think you'll have a bit of a mindset shift, and because it just talks about this synergy between defense and offense, defense being investing and the offense being generating more income. Now the sixth method is a bit more I would say advanced, but think about it. Let's say you're invited somebody to eat to your place. What do? So you're cooking some meal that you haven't done before. You probably just go online and look up for a recipe, and then you follow that recipe, because you're not gonna know what to do once you're already cooking. You need to prepare it for it. You need the ingredients, and maybe you don't have something. You need to prepare for the situation, so you don't need to make decisions while you're cooking. The same principle you can implement in investing. So instead of just making decisions as they come, you make decisions before you invest. So for example, let's say now Bitcoin is halving in 2 weeks in April. I could set some rules for myself. If this happens, then I do this. So if, for example, Bitcoin rises to $120,000, then I will sell 2/3 of my investment. And after that, I will set stop loss to 110,000, and then that 1/3 that is left, I will let it just grow until 150,000, and then I'll take it out unless it's goes under that 110k. Then it'll just go by itself. But this way, I already set rules for myself, and I don't need to make any decisions while it's happening, because you already have a game plan for it. And I can automate all of this, and I don't even need to look at my phone, and it will execute automatically. This way, I just save a lot of anxiety and stress by not constantly looking at my phone. I honestly don't do this well enough. I really want to, but I think it's a bit more advanced tactic as well. But I hope it can help some of you. Since we live in uncertain times, I got worried about what if my broker goes bankrupt? What would happen to my money? That's why I created this video right here, where I talk about protections you have if the Giro Interactive Brokers or eToro go bankrupt.